Ladies and gentlemen, good day and welcome to Punjab Chemicals and Crop Protection Limited conference call hosted by Antique Stock Broking Limited. As a reminder, all participant lines will be in the listen-only mode and there will be no opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Manish Mahavar from Antique Stock Broking Limited. Thank you, and over to you, Mr. Mahavar.
Thank you, Neerav. On behalf of Antique Stock Broking, I would like to welcome all the participants on the call of Punjab Chemical and Crop Protection. From the management, we have Mr. Shalil Shroff, Managing Director, Mr. Vinod Gupta, CEO, and Dr. C.S. Sriram, CFO on the call. Without any delay, I would like to hand over the call to Mr. Shroff for opening remarks, post which we will open the floor for Q&A. Thank you, and over to you, Shalilji.
Thank you, Manish, and welcome to all of you, and thank you for taking your time to go through the financials of 21-22 of Punjab Chemicals. I think you must have already seen our results. On the business aspect, as far as things are pretty good, but there are a few challenges, which of course is well known in terms of certain prices on raw materials, certain fuel costs, etc. But we at Punjab are doing our level best to optimize and get the best way, and that's where you have seen that the growth from last year to this year has been substantially good, and we hope that in the next coming years we will do the same. So I think we can straight go on to a Q&A. And based on that, once as we discuss individually, we can address to any concern, any questions you have. Also, I would like to mention that there would be certain confidential questions which may be asked, and if we are not being able to reply, we are sorry about it, because please understand, Punjab's business is supplying raw materials to various customers within India and overseas. And some customers do not like to reveal the name of the product, so we won't be able to do that, so my apology there. But we'll be more than happy to stress on the business and what we can do, etc. Yeah, so we are ready for a Q&A, Manish. Yeah.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, you may press star and 1 to ask a question. Participants, you may press star and 1 to ask a question. The first question is from the line of Mitesh Chheda from Lucky Investments. Please go ahead.
Yeah, thank you for the opportunity, sir. Sir, some observation on your cash flow. During the year, the cash conversion was less versus the EBITDA that we generated. We see inventory addition and we see addition in case of debtor. So if you could share some comments there. Debtor days have risen, so there is any change in the way we will do business incrementally. Some comments would be very helpful, sir.
Yeah, Sriram here. Thank you for this question. As you know, earlier also we told that our working capital cycle will increase. That's the information we are given some time back. But if you look at 31st March balance sheet, why it has gone up is because, as Mr. Shroff also told you, that there are challenges in terms of raw material and, other shipping and material coming from China and those areas. So we are basically consciously taking a call to, ensure that we book our raw material in advance so that it is available for us for production for the next quarter. And we will move it only once it is ready for movement to the customer. We will definitely do that. But we have built our inventory and we have built our debtors accordingly.
So if you have to give a more normalized scenario for inventory days and debtor days, what it should be for you if we have to look going ahead?
See, my net working capital, as I told earlier, also we want to build to a level of around 40 days. And going forward, we may want to keep it to a level of 50-55 days.
So it is 40 days and we'll go to 50-55 days. That's what you're saying?
Exactly, yeah.
Okay. My next question is, what is the progress on the CRAMS business side, where bulk of our growth is scheduled between, let's say, 22 and 24, and we have a certain revenue figure in mind in 24, which is built up on CRAMS. So, what is the progress there in terms of, business?
Yeah, so Shalil here, as far as business goes, everything is going okay. The way we are discussing with the customers, the way we are looking at projects, everything is in shape and things are falling. There are few delays in terms of registration, because you will appreciate that, Punjab is now trying to enter into different types of markets. Geographically, if you see, in the last 2-3 years, we have been into US and Europe more, and now we are entering into Latin America, Southeast Asia, Australia. So these markets do take time, and as you know that in CRAMS, every product which we make has to be registered. So generally what happens is that we become the technical source, and the customer who does the formulation, which is called the NX3, they need to have the registration done, and that is done by the authorities and takes time. But having said that, as far as we go and our vision where we have said that where we will reach, we are going as per schedule. There is no issue or delays, maybe a few weeks plus minus, but otherwise nothing by and large. As far as growth, in general, we discuss with various customers, we have various things coming in, and this business opportunities is coming our way all the time, and we are trying to ensure to encash wherever possible, where Punjab can assist and supply these products to the customers. Yeah.
Sir, what is the progress on the product addition? We had one which was added last year, and there were another couple which was supposed to get added between last quarter and now. And what is the update on the capacity expansion that you are doing for the client?
So there are two aspects. One is your ongoing businesses, which, there are few products which the market is much bigger, and which that expansion of the capacity has already happened, and we have started delivering the goods from February of this year. As far as the newer capacity of adding products, there would be another 2 new products which would be added, because those product registrations are in place. And the others, we are hopeful that by September or December we'll have some visibility, but pretty sure that by the time we get into the next phase, that is the 23-24, we will be pretty clear with those registrations. Please understand that the products with Punjab deal, we deal with customers who hold registration, and we discuss long term. So whenever we work on this, it is more long-term supply than short-term. So sometimes this registration take time, but the way we have been discussing and talking to the customers, we are pretty hopeful that the balance 2 also should fall in during this year. So to answer your question, this year would be 2. If we get the registration, then maybe 3, but by next, that will add by another 2 products. Yeah.
Okay, so 2 addition this year, and if everything goes through, another 2 next year. So you'll have 7, because 3 you have today, right?
Correct.
Okay.
The newer ones, yeah, we're not talking of the existing.
Newer ones in CRAMS, sir. Newer ones.
Yeah.
Okay. Thank you very much, sir.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Samarth Singh from TPS Capital. Please go ahead.
Good afternoon. Thank you for the opportunity. Please, can you give me the breakup of top line with 3 divisions?
Sorry, can you repeat again and we couldn't hear you?
Please, can you give the breakup of the top line between the 3 divisions? I think we split it up between agro, intermediates, and industrial, right?
So basically, we classify us into 2 categories, that is agrochemicals and performance chemicals. So as we have always said that agrochemical dominates, which is close to 65%, and 35% is performance chemical, In performance chemical, we have the intermediates and fine chemicals.
And what was the total sales for the year for the intermediate and for the fine chemicals? Can you give that separately?
Yeah, so for the intermediates and fine chemicals, so as we have clocked in for the year at 935, we look at close to around 600 plus would go into agrochemical, and the balance to 270 to 280 goes into performance category, yeah, performance chemical category, which combines of intermediates and fine chemicals, yeah.
Okay.
Or industrial chemicals.
For the year, could you just tell me the top two molecules? What percentage of sales were those?
So we classify them, okay, as per you, they are top two products, so they contribute close to around 20%.
20%. Okay, and that's been a significant reduction from earlier years where it was close to 40%. Is that correct?
Yeah, because then the product mix has, done that balancing act, yeah.
Okay. And on metconazole, if I recall correctly, there was a possibility of reevaluation of registration in the EU, which would help sales growth. Is that correct, and has that happened?
Yes, I mean, as on date, what we hear from our customer, because you know that this is a technology transfer, it's a patented product, it's obviously gone off patent 2 years back, but still it's belonging to the Japanese. And we have been discussing with them, and things are going well. And even for the coming financial year, what we did last year, we would double that capacity, yeah, in terms of sales and revenue.
Okay. And the last one from my side, we were also introducing a new molecule in the intermediates, which is supposed to drive growth this year for the intermediates. So could you give an update on that, please?
Yeah, so as far as that intermediate goes, we are online. We should be, we have already conveyed and discussed it with the customer. Hopefully within this year, if everything goes well, we will do the sample including the 3 batches, because with the intermediates you need to file into DMS and all. So we were pretty positive that we would be doing somewhere end of this year, but it looks like because of certain delays, as you know, it's a product which is an import substitute, and we needed some more time to ensure to cover not only the chemistry but also to look at the raw materials. So this has got a little bit delayed by close to around 3 to 4 months. So we expect by beginning next year or the next financial year, we should have the sales coming in. Yeah.
Okay. Thank you so much.
Thank you. Participants, you may press star and 1 to ask a question. The next question is from the line of Pritesh Vora from Mission Holdings. Please go ahead.
Hello. Hello, sir. Good afternoon. My question is about more of an industry. What do you see in the agrochemical and performance chemical? Can you give some flavor? What's going in the industry? How is the demand look like, and related stuff?
So, the sector we are in is agrochemicals. That worldwide population is increasing, land is becoming smaller. 2 is that, the world relied on China, and, in the last, I would say from 2008, to me, I thought, during the Olympics where we saw the robust price increase in many products. But having said that, anyway, after the Olympics, the price went down and people still continued. But I think on more long term, people are looking to diversify out of China plus, or whatever you may give that objective to that business. But I think by and large within Punjab or within India as a business, we are generating more and more inquiries, and more people want to work with us. Because please understand, if they want to have a steady supply source, they want to have a steady pricing and to take it forward. And obviously very important is health, safety and environment. So today when these people put in millions of dollars in registration, they would like a steady supply, because once I become part of the registration, for them to change, it's again a cost, and then the impurity profile, and there are ways of various layers which they want to go. So I think as far as your question goes, they have seen that Indian companies, and especially we are very happy to say that Punjab, we have been very good in supply, steady in terms of quality, and that's where we feel that more and more businesses are coming in. As far as the intermediates are concerned, as you know that many which may go into pharma intermediates, people have relied on China, and we have seen in the last, especially during COVID time and after that, a lot of companies are approaching us and we are trying to work how we can also, supply to them, and that's where I believe very optimistic that moving forward, India in the next 2 to 5 years, if we are, we are absolutely at the right pace, but if you have that capability, then definitely the company would definitely encash, and that's where Punjab we stand, and you have seen in the last 5 years how we have taken the company from where we were and where we are today. Yeah.
Right. And sir, second question is about this EBITDA margin. Although, YOY there is an improvement in the margin, do you think so in the longer term this margin will improve from here on, will sustain as it is, or what is your outlook in the longer term? Is the industry outlook which you described just now aids to a thesis that margin of our company will improve from here?
So, it's a mix of products because, there are generic products and there are patented products and there are technology transfer products. So, moving forward, which, during various calls, I have said that yes, comparatively over the years, from single digit, we are now into double digit. Now at the EBITDA, we are anywhere between 15, 16. And we believe in the next year, going forward to next, we should be in the next 2 years in the range of between 18 to 20%. Having said that is again because of the product mix, it depends on the product chemistry which we are doing, and based on that we fix our margin. And the way we have done our maths, and we believe today we are at 15, 16, and in the next 2 years we'll definitely go up by another 2 to 3%. Yeah.
Very good. And sir, my last question, somebody asked about the cream. So what is our outlook on our cream? This business can grow up to what level? What kind of capex we are spending there? And what is the 4-5 year outlook if I want to have on the cream business? What it can be?
So, as I already said that, China Plus, so people who have been depending, whether it's a European company, US or Japanese or whoever, who have been depending on China have got a little frustrated because, taking the COVID in mind, they have increased prices anywhere between 30, 50 and 60%, where you don't see significant prices increase in raw materials. But anyway, having said that, so as I said that, it's a good opportunity for Indian companies and especially Punjab where we stand. We have business contacts, tie-ups where we have already tied up. And on an everyday, I wouldn't say an everyday basis, but on a monthly basis, between 2 to 3 inquiries which come in, we formulate, we get into discussion, and then, if things go ahead, we close it. But, in terms of CRAM business, it's huge. The opportunity is huge. Today, as I said, more than 60% of our business is CRAM, which can, which if I take last year's this year's financial numbers, so we are at close to say around 550 to 600. This can grow in the next 3 years between anywhere between 1,200 to 1,500 to 2,000 crores. Yeah.
Pradesh, sorry to interrupt you. I'll request you to come back in the question queue for a follow-up question. I request all the participants, please limit to 2 per participant. If time permit, please come back in the question queue for a follow-up question. The next question is from the line of Harshil Parekh from Alpha Credit Advisors. Please go ahead.
Yeah. Hi, sir. This is Amar here from Alpha Credit. Am I audible?
Yeah, Amar, go ahead.
Yes, sir.
Yeah. Sir, a couple of questions from my side. Number one is, if I look this quarter EBITDA margin, it is lower and it has been in the declining trend from last 3 quarters. So wanted to understand that should we look margin or absolute EBITDA is the right indicator for your company? Just wanted to understand that first.
See, I think as far as the product mix which goes in, from quarter to quarter basis. So for us or for you to understand is basically, to focus on EBITDA. Also, sometimes what happens is, like you mentioned that the quarter 4 was less, because sometimes, the shipments which, because of the logistic problem which we are facing for the last 2 years, things have become smoother, but still, so sometimes those products which are of a higher value don't capture during that quarter, then sometimes fills to the next quarter, because, you have not got the timely BL, etc. So it's better to look at an EBITDA to, by and large, judge the financials moving forward.
Shalil, Vinod here, I think let me also put one more perspective. In a normal circumstances, I think you can look at EBITDA percentage as a margin. But if you look at last 2 quarters, raw material prices increase has been significant.
Correct.
What is important is that with that price, we have been able to protect and increase our EBITDA, absolute EBITDA. So this particular 2-3 quarters are exception, but in normal circumstances, I think coming back to your question, what is important for you to look at it is whether we have been able to protect our EBITDA and increase or not. Otherwise, in normal circumstances, you can always look at margin and whether we are growing on the margin. And as also Shalil has already said that we are actually targeting increasing EBITDA margin also over the next 2 to 3 years.
Okay. But normally, when you track internally, you would be tracking EBITDA per kg, right, rather than absolute margin. Or how do you discuss with your client?
So I think the contract manufacturing model is generally partly, cost plus model, where either our margins are fixed or we get some incremental margin in case the prices or cost goes up significantly.
Correct.
So what we generally try to protect is margin per kg.
Correct. So you're saying margin per kg.
Yeah, margin
because what you're saying here is that since the RM has gone up and your EBITDA per kg would have, let's say 20, but the RM was 100 and RM become 120. So in a margin terms, your margin will look low, but in a EBITDA context, you are basically done 20 rupees. So that is why I'm asking you, as an investor, I should look EBITDA per kg or percentage margin.
That's what I'm saying. Last 2-3 quarters are slightly exceptional in terms of the raw material prices, which have gone up by 40-50%. So this is not a normal trend, but I think for this quarter, I think what you should look at is for the whole industry, not only Punjab Chemicals, whether we have been able to protect our absolute EBITDA or not.
Okay, but in a normal sense, you are saying we should look EBITDA margin, correct?
Yes, right. That's a better parameter.
Okay. Secondly, sir, your other expenditure had gone up significantly in this quarter. Any specific one-off into this?
See, Amar, the other expenses also due to volume definitely will go up because the other factory operational expenses are booked in that row. So if you know that, even the power and fuel ask prices have gone up significantly in the last quarter also.
Okay.
Coal prices have gone up for every, every company in this industry. So all this put together, there is a shift on that expense and which has gone up.
Okay, but because what I'm saying is that when I look sequentially also, your other expenditure had moved to 45 crores versus 39 crores, whereas the revenue in the third quarter and the fourth quarter is not materially changed. So, I'm just trying to understand what has led to this kind of increase on a sequential basis.
That's what I was saying. The ask price, the coal prices all have gone up significantly, which has contributed to the increase in the cost.
So now this other expenditure, this new normal trend should continue, this 45 crore, or it should taper down from the Q1 or Q2?
It should, not to that level of what is there in Q1 and Q2, but definitely it will come down.
Okay.
See, we, Amar, as we part of the company, we always like to see alternates in terms of, fuel, etc. By and large, if you've seen, after COVID, then the war, so situations have been a little, volatile. We believe that it will continue maybe the next 1, 2 or 3 quarters, what we see. But I think overall, situation-wise, in what we use as our fuel is very good. We are also trying to see what best alternate we can look at it. And for us as a company, it is very important because, any cost increase is impact to us in terms of expenses. So we always look at that, and this is one of the top priorities, which is on the agenda of all of us to ensure that we do that. And as you know that all our contracts are, which cover raw material, variable and margin. So the variable cost, if there is anything which goes substantially, if there is something, looking at the market, we as a customer, we as a supplier, they as a customer, we sit across and we address it so that, the pinch is not felt both sides and we carry on successfully in terms of the business moving forward.
Okay. So because what I was trying to understand is that at the margin level we are in the fourth quarter, going into the Q1 and Q2, should we expect the improvement in the EBITDA margin? Because gross margin has already improved. So I'm just asking from that context.
Yeah, so moving forward, this is what we have planned, and as again the costs are a little high. So as I just told you that the Q1, Q2, still the general cost on energy is up, which we are addressing with our customers, but we believe at the moment we should be a little bit better than what we were from last year. Yeah.
Okay. And last from my side, sir, we were looking to, I think we commenced already 2 new products, right? In Q4 we supplied some of the quantity, correct? For the 2 new products?
Again, I'm very sorry because of the confidential nature, we will not be able to give you the product name as I already addressed in the beginning, because please understand, dealing with certain customers, especially with Japanese, they don't like, that we flock the product name all over. But yes, it was a Japanese product which we started during the COVID time, and then things were a little bit delayed, and things have become much smoother, and we have already started supply much better than what happened in Q3, then Q4, and you will see now in Q1, Q2 more quantities would go. Yeah.
Harshal, sorry to interrupt you. I'll request you to come back in the question queue. A request to all the participants, please restrict to 2 questions per participant. The next question is from the line of Naitik Modi from OHM Portfolio Equity Research. Please go ahead.
Yeah, hi. Thanks for the opportunity. Sir, could you please share the utilization for both our plants quarterly?
So
You mean capacity utilization?
Yeah.
For our Dehrabadi plant, around 85% is our capacity utilization for the year as such. And Lalru, we are at around 70%. And
I was referring to the quarter.
See here again, sorry, I didn't get your name, Modi, right?
Yeah.
Yeah. So Mr. Modi, it depends on the product mix, what we do, because there are certain products, certain intermediates which go on campaign basis. But by and large, if you see as Punjab Chemical as a company, considering, with a shutdown of between 2 to 3 weeks, where we do maintenance, we don't do a shutdown totally, but, we spread it during the 4 quarters. We are at close to around 85 to 88% in terms of our capacity utilization. Yeah. Maybe if you want to add something on it, yeah.
No, I think what you said is right. Overall, I think capacity utilization for our assets have been good, and wherever we are crossing 85%, we have started looking at low-cost solution to further increase the capacity, because most of our products are growing year-on-year basis. So we just want to make sure that the assets are ready for the future growth also.
Okay. And as you mentioned that the RF prices have been increasing over the last few quarters and...
Naitik, sorry, but your voice is breaking. May I request you to come in a better reception area?
I was just going to say that.
Sorry. Is it better now?
Yes.
Yeah. So referring to the RM price increases as well as the other expenses, so how do you sort of pass on the prices, and can we do it over the next couple of quarters?
Yeah, so, basically what, as I said, that we have a contract where we have raw material, variable cost and margin. So the raw material is an auto check on every quarter. So by and large, there are 2 components. We do 2 businesses. One is which is a technology transfer or a patented product, and one is a generic product. So in both cases, it is very clear that if there is an increase in raw material cost, suppose it is January, February, March for the first financial year, let's look at from April, May, June. And then post that for June, July, August, September, if there is something, it is already addressed during the first quarter to the customer, where we sit and discuss and say that the price, if it has gone up, it is automatically passed on onto the cost as per our understanding, and same goes for the other any exceptional items such as, and this has been in the last couple of quarters, is on the energy cost. Yeah. Hello?
So the line for the participant dropped. We move on to the next participant. Next question is from the line of Praful Rai from Ajova Partners. Please go ahead.
Yes, sir. I had a few questions. The first is we have an asset turn of around 4 times. And we said we are at the capacity utilization of 85%. So if we have given a positive outlook for next year, so do you think that we will be able to squeeze out more from the existing capacities and grow at this rate, or do we need some additional capacities or some debottlenecking at the existing places?
So I think I'll take that question. Yeah, so I'll take that question. Good afternoon. I think fundamentally it will be a mix of the two. In some cases where we are seeing some products where the demand growth is say 40-50% during the year, we are going to invest in creating the assets, and some projects are already under progress at the moment. But for products which are say running for a few years and where the year-on-year demand growth is say 5 to 10%, we are looking at solutions where we can augment the capacity by some very marginal or incremental investments. It can be an investment in say a slightly bigger size of reactor, or some additional to reduce the cycle time or capacity or efficiency. So I think we are looking at mix of the two solutions so that we continue to meet our growth projections.
So will next year, given that we are at 85%, and I'm sure what you are saying will take some time for the capacities to come in place, will we see some kind of a softer growth in fiscal 23 vis-a-vis what we saw earlier?
Not really. I mean, yeah, obviously last year probably growth was phenomenal because of various things, but I think I don't see a significant drop in the growth projections. And overall, because it's a continuous work in progress. It's not that okay, now that the financial year is now starting, we start looking at it. We started looking at some of these things right from second H2 of last year. So from October onwards, we have started working on some of these things. So some capacity increment has already taken place. Some will get added in say next 3 to 4 months.
So in some way, we can say that capacity will not come in the way for our growth. If there is a demand, we'll be able to meet it.
Yes, right. That's the correct assumption.
Second, sir, you are talking of CRAMS. So CRAMS obviously is a little higher margin business, and we are saying we'll start doing something this year in this space. So do you see CRAMS contributing to our margin? We gave an outlook of 2 to 3% increase. That is almost 18% kind of a margin going forward in 2 years. Do you think the contributor to this would be from CRAMS?
Yeah. So as I said, the important part is when we do CRAMS business is the registration.
Right.
So, moving forward, definitely where products we have in pipeline, that will bring in this, the question you asked and you also answered it. So that's where the growth would come in, yeah.
Okay, sir, this I'm concluding if in case I'm getting it right. So we can assume a 20% kind of a growth for next 2 years?
Again, the way we are looking that today we are at a balance sheet X and we want to go to X++. So it's again the registration, like for example, we launched one product during the pandemic and the registration we needed in country like in Australia, and Australia themselves went into lockdown. So, obviously that was again one-off because of the COVID. But moving forward, we believe, with the war situation, with that situation, assumption is, yeah, what trend we had from 20 to 21 and 21 to 22. We expect that on a year-to-year at least we increase a little bit. But keeping that in cycle with what we have discussed with the business, we believe we'll be a little bit better than, as I already told, I think one of the participants, will be a little better than what we are for even this year end, yeah.
Praful, I'll request you to come back in the question queue. The next question is from the line of Alisha Mahalwa from Envision Capital. Please go ahead.
Hi, sir. Good afternoon. Thank you for taking my question. Just wanted to firstly understand FY22 over 21, the volume growth would be about 20%?
Yeah, in terms of sales, we are at 670 and we are now at 932. So, yeah, close to around 22-23%.
Sure. And
you talk. Sorry, because you are talking a little soft. You're talking about the revenue, right?
I'm asking what is the volume growth 22 over 21?
Now, volume growth towards what? Product, sales? I could not understand your question.
Your revenue has grown from 678 to 933. That's a 37% growth.
Correct.
Of this, how much would be the volume growth?
Volume growth in terms of product mix.
So I think, actually, I think our volume growth is about 18.5%.
Sure. And between from Q3 to Q4 of this year, is there any volume growth?
I think that is not really a right question, because what happens is from quarter to quarter our product mix changes depending on the demand of the product. So quarter to quarter comparison is not the right comparison, because in one particular quarter, depending on the season and the requirement, we may supply one product, and the next quarter the product may be different. But year on year comparison is a better metrics.
Understood. And for FY23, the two molecules that we said we intend to commercialize, that would be the key growth driver, because the intermediate commercialization would probably come in 24. So that and maybe some growth coming in the fine chemicals segment.
I think yes, those two molecules will definitely be the growth driver. But at the same time, even in existing molecule during the last year, our customers have acquired a new registration in new geographies, and also trying to expand market share in other current existing geographies. So the growth will be a mix of the two, both the things, new products as well as growth in existing products.
Sure. And is it possible to quantify the 2 or 3 molecules that we commercialized in this year? What is the contribution from that?
I think I think we wouldn't want to share that particular information. Maybe as and when it materializes in subsequent calls, we can have that discussion.
Thank you. The next question is from the line of Anurag Patil from Roha Asset Managers. Please go ahead.
Thank you for the opportunity. Sir, one of the executives, Mr. Avtar Singh from Punjab Chemicals, has recently joined a group company. So can you elaborate on his role at Punjab Chemicals?
Mr. Avtar Singh seems to be as an executive director, so he's just as a board member. That's about it, nothing more.
Okay, so he was not involved in any kind of operational roles recently?
No.
Okay, sir. And one more question, sir.
As an independent director on the board.
Okay. And sir, in our presentation, our long-term order book number has been maintained at 1,500 crore for last 4 quarters. So is there any change or it's?
Well, as I said, I mean, as on date, the business is robust. Things are going very well. Hope that, I mean, as I said, on few products, the COVID delayed in terms of registration, supply, equipment, and now we have this new challenge of war. So, as on date, we believe we are at par, but if there is something unforced, then maybe there is a little bit, 3, 4, 5 months, it depends. So, and that again, not only blames India or company by and large as Punjab, it would affect the whole world, yeah.
Okay, sir. Thank you very much.
Thank you. Next question is from the line of Giriraj Daga from KM Visaria Family Trust. Please go ahead.
Yeah. Hello, Tim. This question is on the capex. So, what is the capex number we are looking in FY23 and FY24?
So, as we already mentioned that, a few calls that we had a capex of 150 crores, which we are doing. We are already in discussions, and I did mention in few calls that during this Q1 or Q2, especially in the call when we do for Q1, once we are done, we'll be more specific in replying your question on this. Yeah, what is that amount? Yeah.
So this 150 crore is pending, right? This year capex of 33 crore doesn't include anything on that side.
It does include.
It does include, right? So then what is the pending capex total pending? Is it 120 crore now or?
Close to that.
Okay. Second, just a clarification. I'm new to the company. So do we do any formulation sales in the domestic market, or it's all technicals and directly B2B?
Ours is basically technical, but in bulk we also supply formulation. But that's again, we are not in the market. We just do it for customer needs.
Okay, so it's 100% B2B only.
Yeah, it's all bulk. Nothing in the market
Okay. Thank you.
Thank you. The next question is from the line of Kunal M. from Jaguar Investment Managers. Please go ahead.
Yeah, thank you for the opportunity. I wanted to, just a clarification from my end. I wanted to understand that you mentioned that 60% of the business comes from contract manufacturing. So that would be dedicated manufacturing for a single customer, right?
No. You can't make 60% of our sales for single customer.
I mean, each product will have a single customer. That's what I'm trying to refer. So you have multiple products and then each will have a single.
Which product is a technology transfer? The product is domain to that customer, then it is single. But then we have certain contract manufacturing where we supply to 2 to 3 people. Yeah.
Got it. And the product will be a part of the registration of the, just like what happens in pharmaceuticals where your DMF is linked to someone's ANDA. It's a part of the registration of that product in that market, right?
Absolutely right. So what happens is that our technical product is then in their NX3 in the formulation, like what technical product, so then it would appear as the technical product supplied by Punjab Chemicals.
Sure. So just one more question. Could you please mention what portion of the business is coming from products which are patented at the present? So whether we are working with innovators on patented products?
So right now we have 2 products which are from the innovators or patented products which now have gone off patent, and that would bring it close to around between 18 to 20%. Yeah.
So they've just been they just recently lost the patent expiry.
Yeah. Around two years back, but here again on both the products there is a potential growth, and this year in one of the products. So if we say that last year was between 18 to 20%, this year would be between 25 to 26%. Yeah.
Okay, and in those products we sell to the innovator itself, right? I mean.
Yeah, it's their technology, so it's a total buyback. Yeah.
Sure. Thank you very much for the answers.
To answer here, this is only one customer. So there are these 2 products. So if it is for you, it is for you, and the other one is for Manish, then it is for only Manish. I cannot offer to anybody else.
Got it. Thank you very much. All the best.
Thank you. Next question is from the line of Rohit Nagaraj from MK Global. Please go ahead.
Yeah, thanks for the opportunity. Congrats on good FY22 number. So my first question is in terms of the demand. So currently, given that there have been challenges in terms of raw material supply, the war issue, logistics issue, are we seeing any challenges from the demand side of our customers, or there are orders which are getting postponed because of these different set of challenges? Any thoughts on this? Thank you.
So as on date, as I think somebody had asked a question to Sriram regarding the inventory. So we have to build that inventory in terms of raw materials, whether we're getting it from Europe, China, US, Japan, wherever. So we have done that. Answering your second question, as far as today, whichever customer we talk to, they want one. If you are supplying 1 container, they are asking 5. So we are in constant touch. Yes, there is a challenge after COVID. Is the challenge of this war. Logistics are cancelled, but is also a challenge. But so far, there is no cancellation or deferment from any customer. But because of logistics, if we have planned to ship within the next 2 weeks, maybe it doesn't happen in 2 weeks. It happens in 2.5 weeks or 3 weeks, something like that. But business-wise, it's pretty robust. People need more material. They understand and they are working with us. So it's more like a team management, which we work with our customers especially during this challenging times. Yeah.
All right, so got it. That is really helpful. So the second question in terms of the CRAMS business. So normally, I just wanted to understand our philosophy when we are going in for these molecules. So is it an inquiry which comes from the customer, or we do our own channel checks and then go after a particular molecule? And what kind of margin profile do we usually look at? So given the current circumstances, obviously it will be on a per kg margin, but normal circumstances it will be a certain percentage of EBITDA margin. And a light question to that, for these CRAMS orders, do we have a specific longer term time horizon, and are we the exclusive vendor for the customer? Thank you.
Yeah, so as you asked, is that the business is of course defined in terms of the tonnage which we do. I think that was your first question, because you asked too many questions. I got a little confused. Can you just once again come back with your question?
Right. So the first is whether we are.
Because you have asked 5 questions at a time. Ask 2, take a pause, then ask 2, because all questions are sometimes correlated with each other. In terms of, so my request, I have a request that if we can, break it up into 2 and 2.
Right, sir. I'll just do that. So one is in terms of vendor. So are we exclusive vendor? And those.
So today, Punjab is lucky and has given itself in the market where we have customers from a Japanese to a European who are A-listed and they know us very well. So any new inquiries or any new things come generally when we exhibit or we have newer inquiries. And also please understand, country like, for example, I give you Japan. Now in Japan, it's a very close network in terms of how they look at businesses. So every boss discusses with the other person that, how are they faring and what are they doing and which are the good companies. So fortunately, not only in Japan but elsewhere in the world, Punjab name flags up very well in terms of quality, in terms of service, openness, transparency. So that's where, we get newer inquiries. And obviously, beyond that, we also have our marketing team who are always working and hungry for newer business, newer opportunities, where we understand that this companies like an FMC or a smaller company like an Oxfam, Globachem, name it, or a Sitcom, who are within the Europeans, which are between 200 to say $800 million, who are looking for supply chain. So we approach them, we talk to them, and generally what happens is that Punjab becomes a little a better partner for them, because they know that we are talking to the MNCs, the big companies like a Japanese, like a Nippon Kayaku, like a Corteva or like a Dow. So this brings a little bit knowledge in terms of them to ease the business with us, to take it forward. And of course, ongoing our marketing team through exhibitions, through our various business technologies or the technique or the formula of success which we know, we follow that path to tap new customers. Yeah.
Rohit, I'll request you to come back in the question queue for a follow-up question. The next question is from the line of Dhaval Shah from Swan Investments. Please go ahead.
Hello. Am I audible, sir?
Yes, sir, you are.
Yeah, hi, sir. Sir, 2 questions. First is, so the 50 crore capex which you would be doing, what sort of IRR do we have in mind for this capex?
So general, any investment which we do, as per the industrial, today if you put in $1, what is the return of investment you are looking at? So it's anyway, it depends on the product cycle, it depends on the product cycle and how many steps of synthesis it is there. So if I'm putting in $1, I look at anywhere between $2.5 to $4, depending on the product cycle. Yeah.
So if you're putting $1, you look at $2.5 to $4 of revenue.
Correct.
So, so including your working capital
investment. It's a 2-stage, 4-stage, 6-stage, depends on the product cycle. Yeah.
Agree. So considering the working capital cycle and the asset turnover, plus last 2 years of inflation, what we have seen in our capital equipment, what sort of IRR you would be negotiating with the customer, given you are in a contract manufacturing business?
What type of INR?
IRR, yeah. Like your
Sriram, maybe you can take up this question.
Basically, we look at, when we discuss with the customer, we look at what is the kind of margin we do with them. And also, if you look from the angle of IRR, we look to close to around 22 to 25% of kind of IRR.
This is okay. So we are considering even working capital investment in this.
Yeah.
Your total capital invested in the business.
Correct.
Okay. And sir, what sort of increase in capital equipment cost have you seen over last 2-year period?
Last year we invested close to around 30 crores of basically for asset renewal program, So similar asset renewal program we'll be having for the current year. And in addition to that, if we sign up a contract with the customer, that can be having a additional capex.
Okay, okay. And so just last question.
So sorry to interrupt you. I'll request you to come back in the question queue. Thank you. The next question is from the line of Aman Vij from Astute Investment Management. Please go ahead.
I think can we restrict to another 2 or 3 questions because we have a con call at 3:15, so we are already at 3, and so let's look another 5 to 6 minutes if you guys are okay with. Thank you.
Yeah. Good afternoon, sir. One clarification. Did you mention that metconazole sales will double for next year?
Absolutely.
So, sir, if we look at our top 2 molecules for last 2-3 years, it hasn't grown much. Is my understanding correct?
See, again here, a product like a metconazole was under re-registration, and generally, again, please keep that in mind. 2 years was lost basically on volumes in terms of existing products and in terms of newer customers because people could not meet. There was COVID challenges. Maybe the contracts were signed, but delivery of goods such as vessels, reactors, etc. were delayed. So, I think these 2 years were exceptional, but moving forward, we hope again, keeping the war situation, as I said, we all pray that things should fall in place, and maybe, as I said, on a year-to-year basis, you'll see more and more improvement in terms of the performance of the company. Yeah.
Yeah. So on these 2 products only, what kind of volume growth do we see in these top 2 products for next 1-2 years? Now this registration issue is gone.
Yeah, so I think, as I did mention on one of the products is metconazole, as you already said, that what we did last year would double this year. The other product which we are already doing would grow by maybe close to between 8 to 10%.
Thank you. The next question is from the line of Chetan Phalke from Alpha Invesco Research. Please go ahead.
Yeah, good afternoon. Thank you for the opportunity. Sir, I just wanted to understand on the R&D front, can you just elaborate a little on our roadmap? Let's say, what is our current team size? What are we planning in future? How much are we spending today versus how much can we spend going forward? Because right now we are focusing more on contract manufacturing with, let's say, clients like UPL, Adama, Nippon Pax, etc. But can our company be in a position wherein we can supply products to them going forward?
I think I will just take one and then maybe Vinod can add to me. Companies such as Indian or Europeans are not innovators. So, today if any company tells you that I have done and innovated a product, no. But yes, we do work on products which go off patent, which we do with the existing processes available. So if you're talking of innovation, no Indian company is an innovator other than, we have seen few Japanese. So, that would be my remark for, on the product, but maybe Vinod can elaborate more on what we are doing in R&D and our focus areas. Yeah.
Yeah, I think, what we do is generally once we get an interest from a customer, then either we may have an existing process or we might be asked to look at some literature survey which are sort of a route of synthesis which are off patent. So our R&D team actually picks up the most sufficient route based on the situation and the raw material availability within the country. Now on R&D front, obviously we are augmenting our capacities. During last 1 year, we have added a couple of more PhDs and some more scientists to our team, fundamentally focusing on both the intermediate as well as any specific interest that is coming from customer. Their customer is asking, fine, gentlemen, this is the product that we want, this is the growth projection we have. Can you develop this product for us? So that's where we take it up right from starting from laboratory trial to piloting to end stage. So that's the roadmap. Fundamentally, we want to further increase the size of our R&D and our R&D setup so that we can provide end-to-end solution to more and more customers. Hello.
Go ahead, sir. Thank you. The next question is from the line of Jigar Valia from OHM Group. Please go ahead.
Yeah, thanks for the opportunity. My question pertains to the next 2-3 products that we may see by 23-24. These would be patented or no, or are we also looking at products which include site transfers?
Basically generic product. Yeah.
And so in that case, fair to assume that the ramp up has to be gradual as the registrations and the sales pick up over the few years within the specific countries of registrations.
Of course, because today they have an existing source, which they want to discontinue. So it takes time, and as I said, depending on the country, it takes sometimes it takes 3 months, maximum 4 to 5 years. Yeah.
And I think in some products, like those couple of products we have introduced, but during last year, we have given 2 or 3 products where we have done research and piloting work, and those samples have been given up for registration. Now those registrations will take whatever time it takes, and that will also come to our portfolio going forward.
Right. And generally, we've been winning certain contracts from existing peers within the country itself, right? Or is it generally from the other high-cost locations to here is what generally has been the bulk of the growth strategy on the grams?
I think it is a mix. So we are getting some contracts from new customers or a new product from the same customers, and it can be from any geography. So it can be either from Europe or India or Japan. I mean, we are getting from across the board.
Got it. So given the profile of the products that you're getting into and now the specific, so incrementally over the next couple of years, should the gross margins be sustained, or as a trajectory one can see a further improvement which is possible on the gross margin side?
I think as Mr. Shroff has already, I think Mr. Shroff has already said our overall objective is to increase the top line and as well as the gross margin. So that's where we are looking at increasing our EBITDA margins by 2 to 3% over the next 2 to 3 years by product mix, by capacity utilization and efficiency improvement. And this is going to be a mix of initiatives. That's where we look at better margins going forward.
Thank you. Ladies and gentlemen, we'll take that as the last question. And now hand the conference over to Mr. Nachiket Kale. Please go ahead.
Hi. Thanks, everybody. Thanks for participating on the call, and really appreciate you picking out the time and asking detailed questions. For any queries, you can get in touch with us. Orient Capital is the investor relations advisor to Punjab Chemicals, and you can get in touch with our contact details mentioned in the presentation. Thank you so much.
Thank you very much. On behalf of Antique Stock Broking Limited, that concludes this conference. Thank you for joining us. You may now disconnect your lines. Thank you.
Okay. Thank you.
Thank you.
Yeah. Thank you.